It's a fascinating note you write because you did this 12 years ago. How has it changed India since you did it the first time in depth?
Yeah, when I first joined KKR in 2011-12, we wrote a piece and we said, this is what India needs to do to hit its potential. One of them was invest in infrastructure. The second was reduce its deficits. It had twin deficits. And the third was stop subsidizing everything and let the real economy do its thing. And I was just back there recently, and you can see from our piece, I mean, they have done those. I mean, a lot of credit to Modi. He's done an excellent job. But when you look at it right now, massive investment in infrastructure, particularly around roads, which is critical to that economy. Second is around data and making sure that you can actually have the technology do what it's supposed to do as it relates to the internet. And then finally, I think about all the stuff around the rule of law and making a better bankruptcy court. That's something where foreign capital now wants to be in India, and it's more active. And so it's a pretty good environment right now. As you mentioned, a lot of people are thinking, where can I get emerging markets growth? And what you see is while I'm talking about this latest update, India's public equity markets have been outperforming by about 700 basis points for the last 10 years. So this story, it's a growing one, it's getting better, but it's not a new one.
So those reforms you talk about, how do they manifest themselves in economic numbers? For example, growth. And by the way, we've always been concerned about inflation in India.
Yeah, so there are a couple of things. One is real GDP has gone up since the past couple of years. There's more consumption in the economy. I think you're seeing the rise of the middle class, particularly the middle to slightly higher class. They're really starting to spend, and they're enjoying the benefits of that. The second is everybody now has a digital bank account, and so the government can be much more targeted in terms of doing fiscal subsidies, making sure that money is being transferred properly. And then the final thing is, unlike China or the United States, India has really created a technology platform that is agnostic. So their version of Amazon or the search engines is actually just to have something that's open to everybody, not having one private sector company control that. And over time, that could be a differentiated model. It's still early days, but those would be a couple of big changes we're seeing.
India's economic growth is driven by domestic consumption, something China has yet to achieve as Chinese households continue to emphasize saving over spending. But Ishwar Prasad of Cornell says India will need to reinforce that domestic consumption with higher-paying manufacturing jobs in order to continue its move up the global economic ladder.
India has a much higher rate of household consumption out of household income. Now, this is true, even though India's household saving rate is quite decent. And the overall national saving rate, however, is not quite on par with China because corporations and especially the government don't quite save as much as those in China do. But in India, household consumption has been a very important driver of growth, and in particular, with the rising middle class, I think India has been counting on consumption to drive growth. The one problem that held back India's growth story is that the manufacturing sector for a long time was not doing very well. And it's hard for an economy to graduate from being low income or lower middle income to middle or upper middle income status without having a vibrant manufacturing sector that can generate high paying jobs. India is beginning to get there. So it's not only that the middle class is expanding, but high-wage jobs are rising. So overall, I think the consumption story is much better in India than it is in China.
The good thing is they don't have to start by increasing from exports to consumption. The economy is almost, I think, 65 to 70% consumption to start off with. So it's really about increasing GDP per capita. That's why it's so important they keep inflation down, because you need to see real GDP per capita go up, which is tough in an economy that often has inflation. The second thing is they've done things around taxation to make sure there's something called the GST tax, where it's made it more efficient. So you actually have the ability to transport goods across different regions within India. In the past, you've had waste, and it's taken time, and the toll on actually getting the goods from one area to the other has been much worse. So that's improving. And then the final thing we're just seeing is there's more confidence in the consumer. We have exposure to different types of financial services companies in India, and actually the loss rates are down. So there's a confidence where people, they want to invest in their businesses, they're actually paying off their debts, and the consumer is spending a little bit more.
Economic reforms put in place by Prime Minister Modi's government have created the foundation for India's economic progress, resulting in improved consumer confidence. But there's a lot more to be done, particularly when it comes to growth in per capita income.
That's going to be very difficult. The gulf that has opened up between India and even China in terms of national GDP overall or per capita income, that's going to be very difficult to bridge. A couple of decades ago, the two economies were in a very similar status in terms of their per capita incomes. And even in terms of size, China wasn't that far ahead. But right now, I think India's per capita income is probably around $2,000, $2,500, which is well below that of China, about a quarter of that of China. So that gap is going to be difficult to make up. And India is on track, perhaps in the next few years, to become the third largest economy in the world. But it's still going to be a much smaller economy than either China or the U.S.
GDP per capita goes up when you get urbanization. People come into the cities, they can use their skill sets. India's got a tremendous amount of skilled workers. They need to learn how to incorporate AI into what they're doing. They need to integrate into the global economy, but they also need to make sure that their wages are protected from the inflationary concerns. And I think the administration clearly knows that in India, but they need to continually focus on that to make sure that you're getting kind of a rising tide lifting all boats.
So give us a peek at your playbook, if you would, at KKR. I mean, you went over there to look at it as an investment opportunity. For investors watching this, where do you see the investment opportunities?
I think there continues to be, India has a wonderful set of large conglomerates that are going to grow both in India as well as in around the world. They also, I think they've done a lot around technology, retail, telecommunications. We've been partnering with some of the larger companies in India to really bring foreign capital and some expertise around industries. That's been a great relationship for us. So that's one big area. You can play that through public markets or private markets. That's through our private equity at KKR. The other area that's really growing fast right now is around infrastructure. The government is looking to move $4 to $5 billion out of the public into the private hands per year. Toll roads, transmission of energy, data, all that area, that is booming.
Henry, you've laid out some of the opportunities. What are the challenges? You mentioned consolidation in agriculture, perhaps. Inflation being something you have to really keep an eye on. What do you see as the biggest challenges?
Look, I think as a global firm, we have a hugely local presence there. We've got people in Gurgaon, we've got people in Delhi, we've got people in Mumbai. You've got to be local to play in India, and that's kind of point number one. Point number two, you talked about, I think the things they need to do around the agricultural sector. Ultimately, though, creating transparency around capital and just more reform, right? You've got 1 billion for people you're trying to integrate into the economy. Not everything is going to go perfectly. So I think having fiscal discipline around how you grow and having a long-term focus. I mean, what they've done around the banking system, what they've done around some of the things in technology to ultimately unlock some of the productivity, that's a huge focus.